Welcome back to Everything Money. We have our special dear friend Jimmy from Learn to Invest is in the studio. Welcome, Jimmy.
Hi, I'm Jimmy.
In this video, we're doing a blind stock reaction. Our followers, Jimmy, love this. We're going to get Paul, Jimmy, and Mo to look at a company blindly, just the numbers, and see if it's a good deal, what sector is in, and would they be buying a company and what they should pay. You should be trying this at home, and we'll show you why. Go ahead, boys. Let's look at it.
Okay.
So here's the chart of a company that Tim picked. Now, as value investors, as you were watching at home, we love this kind of fall. And we're going to show you why we love potentially some of these numbers. Go ahead, Paul. Walk me through with your grand wisdom.
This is a company that's fallen almost 66% in the last year. A $1.3 billion market cap. So a 5-year P of 12.5 and a 1-year P of 8.3. Oh boy, look at this gross margin. 60% with 7% bottom line margin.
So right off the bat, does this look like a very, does it look like a hype stock, a growth stock?
Looks like a growth stock to me.
Looks like growth, yeah.
Growth.
Based on, well.
Unless that's wrong. Not that you guys, I know you guys tricked us last time. But
well, they didn't trick us. They tried to trick us.
Yeah, they tried to trick us.
Remember that.
But unless that is, they had an unusual year. Something unusual happened in.
What do you think could be wrong?
Well, but look at this PE being much lower.
No. And I'm thinking gross profit. I was thinking profit.
Oh, no, this is gross profit. It's gross profit.
What industry?
So software tends to have.
Here's this is what happened. COVID, and then it spiked to 150, and it came back down to 53.
Zoom.
Yeah,
it's Zoom.
Okay.
Zoom could be PayPal.
Okay.
No, it's not PayPal. PayPal's market cap is way bigger.
Oh yeah, it is.
I think Zoom went higher.
So right off the bat, are you interested in this company with the revenue and market cap? And
I like this PE. Let's go look at. And the other thing is, with no dividend yield, it makes me feel, but look at this 5-year average free cash flow, 160.
Good or bad?
I mean, this is good, but I don't think Zoom had this kind of cash flow. Zoom would have skyrocketed in the last year.
So I guess instead of just guessing the companies, just tell me why you think your thoughts as a value investor.
Great idea. So I'm not turned off yet. Price to sales ratio is very low. This is like auto industry price to sales ratios right here. Now, what I'd want to see for this company, for me to really love it, I'd want to see that this is a newer company and this margin is going to go higher and higher and higher, right? Because this gross margin is pretty good. Mm-hmm. Auto industry doesn't have this kind of gross margin, but it's selling for price to sales of the auto industry.
Are they paying a dividend?
They're not.
No.
Okay.
Can we see the income statement?
Of course.
Yeah, let's see the income statement.
Here we go.
So the thing I do like is, even though this concern, I want to reiterate, the concern of declining profit, but it's kind of mitigated by increasing revenue because I want to hear the story. Why do they have increasing revenue but declining profit? Jimmy had a point about, is it oil? But I think the revenue would have followed the oil prices as well. So I'm looking at this going like, okay, this doesn't concern me as much because of this. But this growth rate is mid-single digits. Mid to high single digits.
It's not very fast. It's not a very tech-like company.
One last question, because I can't see it. Did they have a COVID spike in
revenue?
Yeah.
No, it doesn't look like it.
Okay. All right. Balance sheet?
Okay. Well, that's income statement. That's net income.
Shares
outstanding. Oh, my lordy.
Are they buying back?
Shares outstanding.
55 million to 24 million.
50% buyback in shares.
So I know we're not trying to guess the company, but I think I own this company.
You do not own this company.
Oh, Mo has a guess.
$4 million in cash.
But total current assets, 181. Let me see total current liabilities.
Okay. Are you buying this?
Ooh.
Lots of debt?
Ooh, total current liabilities is huge. What the? You see this? Their cash and cash equivalents to 180 million. Go back to that. Let me make sure I read that right.
Okay, let's make sure. Shout it out for me.
Yeah, total current assets 182 million. Total current liabilities is 600 million.
Yeah,
that's bad.
A lot of debt.
Well, yes, correct. Go ahead.
Okay, next. Go ahead, Mo.
Can we look at their inventories?
How would an oil company have inventory? I'm kidding. I don't even know. Paul, how about cash flow?
Go back to the previous picture.
Okay.
Inventory. Go to the next one. The last one again.
Sure.
Raw materials, work in progress.
81 million in inventory.
81 million in inventory. Mm-hmm.
Go to the next page.
Okay.
Oh,
their current liabilities have skyrocketed. Mm-hmm. They were positive 10 years ago, and now they're massively negative. See, this one concerns me. That alone I'm not going to say it distracts me from, I have to understand why that is. That makes me go, how do they go upside down so fast? Yeah, capital lease obligation. Okay.
Jimmy, your thoughts?
It's retail?
It's got to maybe something in manufacturing. It's got to be something.
60% gross margins are really high.
Yeah.
But it does make sense if it's 7% bottom margin and 60% growth. 60% gross margin, even for like retail, if it's a manufacturer of retail, like
Yeah. High or low 7%, and I'm assuming that the gross profit. I mean, the net profit has been fairly low for a long time. Do
Yeah.
we have the 5-year average? Only because, but that would put it in the retail. I mean, something like Walmart's going to be at 3 or 4%.
it is. It's like 4 or 5 on the high side. Okay, go to the next pages.
Okay. This one? Okay,
Cash
good.
flow. When cash flow is growing. Ooh, drop. Okay.
So
All right.
cash flow over the past decade was 60 million, 78, 60, 67, and then went down 50, 51. Then now a slow climb, 65, 69, 81, and 140 for the net income. So the 5-year average is 81 million.
Okay, go to the next page.
Okay.
Next page.
Wow.
8 pillars.
Okay, so now I'm at the point of trying to guess. Would I buy this company?
Yes.
This tells me that they're in a dying industry. Like, I feel like this is an industry that has a lot of, it's retail, isn't it?
Is it like a Best Buy or that type of company?
No.
Have they been growing the revenue? I haven't looked at them.
Yeah, they have been.
It is retail.
It is retail. It's like a Macy's, a Dillard's, a Kohl's. It's something like that because I've seen this a lot in retail. They're just buying back tons of shares.
Yeah. A Macy's or something would make sense. You got such a low.
Yeah.
So we've taken the news out. We've taken the what people are saying on YouTube. You don't know who the CEO or what they're doing. Just blindly, you get posed with this deal, Paul.
The only thing I'm concerned is I want to understand why revenue is going up and profit was going down in those previous years.
Jimmy, final thoughts on
What
your
are
guesses?
do we have analysts?
No, we don't.
No. We don't do that in the blind.
Is it one of the 3 I just mentioned?
No.
It's not Dick's. Do I like the company? I like the company, what I see so far, but I'd have to understand,
So far, so good.
yeah, I'd have to understand why their revenue is going up and profit was decreasing and why all of a sudden profits skyrocketed recently. I actually thought Smith & Wesson at first, but I'm like, it's not Smith & Wesson because Smith & Wesson has a ton of cash and inventories versus total liabilities.
Yeah.
So as an exercise for you at home is, we sort of pose this question because some people say that you should start reading 10Ks, learn what the company should be. You should be able to work and be an executive in this company. But if the numbers don't make sense, Paul, you're out. There's no reason to.
Yeah, the numbers make sense here so far. So I think stock analyzer tool. Oh, one thing I want to do, go back to the cash flow statement. I want to see if they've made acquisitions.
This one or next one?
One more. No acquisitions in the last 5 years. So that makes me even happier. They were able to get revenue growth without acquisitions.
Without buying their.
How about more and more opening of stores? That's something I'd want to know. This is retail, and it's like that, or whatever it is. What are their same store sales like versus are they just opening more locations to get more locations out there and increase their
So
revenue?
if you're interested, you'd fire up the 10K, take the time to read that, maybe listen to some conference calls. Okay.
Guys, I can't reiterate that enough. Do not go learn about the company before you see the numbers. Your filter should be the numbers. If the numbers don't make sense, you just move on from it.
Total
I don't
waste of
care what the company, just the numbers don't make sense. If you do the other way around, you'll find out yourself falling in love with the company and then value doesn't matter. And then you end up broke.
30 seconds and move on.
Yeah, I think that's the key for you at home is because if you keep watching news and YouTube, they're going to tell you everything these companies are going to do over the next decade, what they're planning on doing, what they might do. And in essence, we'd love to look at what they've already done and then buy it cheap, buy a great company and buy it cheap. So
It's really their numbers tell me what they've done. Then I'm going to go and look and see what they're saying to see, can they keep this up going into the future?
Do 2, 4, 6.
okay, so revenue growth of 2, 4, and 6. Got it.
Profit margin, do 5, 5.5, 6.
And 6. Okay.
And the reason being, this is a fluke year of 7%. Free cash flow margin, do 7.75 and 8.5.
7, 7, 5, and 8.
Yep. No, and then 8.5.
8.5. Okay, strange. Okay.
Oh no, do 9. Sorry, do 9.
Okay, make up your mind.
No, time out. 7.75.
Oh,
and
7, 5. Thank
Yep,
you. Paul.
and then 8.5.
Thank you so much. That's why it didn't make sense. Got it. 8.5. Okay.
PE. So this is the hard part. We see growth here. I'm going to go Jimmy, what do you think about 12, 14, 16?
That's what I would put.
Yeah, I think it could. It's got to be on the lower end. Those
Especially
numbers
with
make
retail?
sense. Retail, and look at the price to sales.
Honestly, retail, I'd probably be doing 10, 12, 14.
Yeah, that
Do 10,
feels
12,
better.
do 10, 12, 14.
It is retail, so 10,
12.
12, and 14. Okay.
And then same thing for the price of free cash flow, 10, 12, 14.
Okay.
And then desired return, 12.5%. Am I going to see it down here?
I know. You can turn away for a second.
12.5%. Well, we want to see also,
Okay.
hit the analyze button.
Okay.
Holy cow.
Current price, $55.
Okay, so it's,
Wow.
yeah, we knew the price because we saw that
Yeah,
150
yeah,
down
on the
there. Man, I'm stumped.
I'm
Yeah, Jimmy, are you
cautiously interested. So,
Well, everything should be cautiously interested
Yeah.
when you look at the numbers.
but for me, like if I'm analyzing a company and it looks like it's incredibly good, I'm like, ooh, I've got a
what
deeper dive. Yeah, I would look closer at this one for
I would
sure.
look definitely closer at this one. And the 10K is going to tell me a lot about retail and the same store sales, things like that.
Are there big things, Jimmy and Paul, that would sway you from not wanting?
Well, the one thing I didn't like on their balance sheet was the capital lease obligations only started 5 years ago. So something tells me, did they own locations before and they started leasing later? The whole current assets to current liabilities really bothered me.
So the first thing I did is I saw this price fluctuation, so I knew it was something that did crazy. But then I looked at that aggressive share buyback. There's not many companies out there that are doing that. So that tipped the scale for me. And then I wanted to see the balance sheet because I wanted to see those. I have not seen a company with 8 pillars like this that has that much of a mismatch with total current liabilities and total current assets. It was Sleep Number.
I got my number right here,
Sleep.
Paul.
There we go.
I got 84 last night on my Sleep Number. You know, folks, if you're following the Everyday Money community, I spent $11,000 on a stupid Sleep Number bed, and I am sleeping like a baby, Paul.
And FYI, I have puts on Sleep Number.
Do. And I actually removed my puts on Sleep Number because I didn't understand that. I didn't take the time to go look. So that to me was like so off the rails. Maybe there's a reason for it.
Jimmy, what do you think? Now that it's Sleep Number, what do you think?
Sleep Number. I've actually never really analyzed the company. It's I mean, it is super interesting. Why is the stock getting killed over the past year? That's a big fall.
Yeah, I don't know.
I like it better if there's like a stock jumps off a cliff. Yeah, it's pretty identifiable as to what happened. But when you got such a gradual decline, I mean, that's a long.
Yeah.
And revenue is going up, right?
Yeah, revenue is going up, profits going up.
I'm more interested when I think about that, even ignoring the company. You know, what is happening?
Well, is this this is usually the disconnect we like, right? Revenue up, profit up, stock price down.
Yeah.
That's why so many folks in our community, the Everyday Money community, have been attracted to looking into this company.
What happened that caused it? Was it COVID that had the huge?
Yeah, it was a big fall and then it's just a spike when everybody was staying home and buying beds, I guess. That's why I asked you, was there a big spike in revenue?
Yeah, but
Because
there wasn't much.
There wasn't much, and that's what I was actually shocked by. To see the price move that quickly, that much that quick with no massive
Interesting.
spike in revenue.
So there it is, Sleep Number, folks. If you've ever been interested, that's someone's blind take on a company. And if you get further interested, you can check out the 10K and read more. Thank you, Jimmy, for joining us. And Paul, good job on that guess. Good job, Mo.
Mo got it right.
See you next video.